Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce, Tuohey, and Matthew Monaco.
Welcome to episode 9 of the Beyond the PDT podcast. I'm one of your hosts, Matthew Monaco, and in this episode, we interview Kyle Williams, who is an active OTC trader from San Diego State University. Like many of us, Kyle has made a lot of mistakes along the way, once trading a daily chart that he thought was an intraday chart and was quickly confused on why the price action did not line up. From there, though, he's learned a lot of lessons, and he shares all of them in this episode, including a couple important quotes, which include, it's better to be late and right than early and wrong in a trade, and most importantly, to trade well and not your PnL. In this episode, we discuss a lot of charts, so it is important to note that this episode was recorded on Tuesday, April 23rd, 2019. So if you're going to look up any of the charts, make sure you go back to that date, so that way you can match it up with what Kyle is explaining with his OTC short strategies. Now, without further ado, let's dive right into the episode with Kyle. Yeah, how's it going? How was your week?
Good. Let's see. I covered my Zoom short today for 1,600. So that put me at over 10K for the month. So that's pretty stoked about that. Other than that, just Tuesday, so got the rest of the week to go. What about you guys?
I mean, nothing crazy on my end or anything. I recently decreased my account size quite a bit, so I'm just trading with some smaller size, but nothing crazy.
Yeah, I'm in finals week right now, and it's just that's taken up a ton of time for me. Like the past 2 weeks, it's just been group project after group project. So I've taken a slight intermission so I don't keep losing too much money.
Yeah, my finals week is I think the first or second week of May, so it's coming up.
Oh, okay. Where do you go to school?
San Diego State.
Nice. Okay. And what's your major?
Finance.
Good for you. Nice.
Sweet. Are you going to use that or?
No. So I was an engineer major when I started. I didn't know what I wanted to do when I was an engineer, so I kind of started searching about like what I really want to do. I started watching reading some books, doing a little bit of everything, and I eventually watched the movie The Big Short, and that opened my eyes to the stock market and everything. And so then from there I changed it to finance, but it turns out finance hasn't helped me at all with trading. So
that's fair.
Was that early in your college career, or did you kind of make the changeover pretty late?
My freshman year, I knew I didn't want to be an engineer. I mainly just picked it because my dad was an engineer, and I've always been better at math as a subject. But I didn't want to just change it to a major that I didn't know. I didn't want to keep guessing what major that I was going to change to. So until around my sophomore year is when I found out I wanted to change it to finance.
So what year are you right now?
I'm technically, I guess, a fifth. This would be my fifth year. Because when I changed majors, set me back a big time. But I'll graduate next fall. It's about 1 more year.
Nice. Okay. Not bad at all.
Gotcha. Yeah. I mean, I get that. I'm a software engineering major, and I mean, it's tough, man. It's tough out there.
Oh yeah. I finished all the calc, all the chemistry, and then I was like, you know what? I'm going to change to finance. So
are you going? What are your plans after college? Are you going to go full time, or do you plan to use that finance degree?
So I thought me taking or having a finance degree would help me more in what I want to do with trading necessarily, but it has really nothing to do with it. So I had thought if I didn't, if I wasn't as profitable as I planned to be by the time I graduated, then I would get maybe a job at a brokerage firm or for a mutual fund kind of route. But at this rate, I'm on track to just keep on trading full time. So that's what I really want to do. So
your profit curve is looking exponential. The past 8 months or something, it's looking like you've really just.
No, yeah. The more I have a habit of watching it. It's I'm drawing something. It just keeps seeing it go higher.
No, yeah, it's awesome. And so you started trading or started posting on Profitability Basket at least back in 2016. Is that kind of right when you actually started, or had you started studying before that?
No, so I had, oh my gosh, I had made such a mistake of just starting right away. I had joined Tim Sykes in June or July 2016. And I remember just thinking, oh, I'm just going to start right away. I don't need to study. Didn't watch anything, didn't look over anything. I think the first trade I took was completely blind. I didn't even have a chart up. It was that bad. And so over probably the next 3 to 4 months, I lost probably a 25% of my account, which looking back wasn't actually that bad, compared to others. So I then realized like, okay, I need to actually study and actually learn what I'm doing here. For the next 8 months or so, I just studied, watched all the DVDs, watched all the video lessons. And then around my 12th month was my profitable month. That's led me to where I am now.
Good for you. Yeah, no, and you can definitely tell just looking at your chart where you kind of started to turn your trading around. And what was that, about a year before you started seeing some consistency in your trading?
Yeah, it was definitely around, I think my 10th month was my first profitable month. And at that point, I kind of realized, it kind of clicked for me where I have to, you hear people say all the time, you have to, stick to 1 or 2 setups and just grow your account with those. And it's one thing to hear it and then another thing to do it, I, for the longest time, I tried like so many different things. I want to learn, these many setups at this many times. And once I just narrowed it down to like 1 or 2 setups, the very first setup was the OTC like dip buy, like massive panics. And that put me at my first profitable month in month 10, and then gave it all back, had to tweak my system and setups in month 11, and then month 12 from till now has been profitable.
Awesome. Yeah, no, and so what did that feel like? Finally kind of realizing that you had your first profitable month, you could find consistency, and you were relatively speaking a new trader at the time. So what did that feel like to you?
So I think a lot of people think it's this one time aha moment and everything just makes sense from there. But that's how it wasn't for me. It was almost like every trade, good or bad, just left a little like nugget of lessons. And it kind of like the profitability chart, it's just been growing exponential with terms, not just in PnL, but in knowledge. So it, like my first profit month, I think I made like $150, and so many people were thinking if they made $150, they wouldn't feel like that's significant or that's meaningful. But I think that's such a wrong way to look at it, because then the next profit month was 300, then 900, then 1200, then it goes to 2000. Then of course you have some months that go back down to like 900 or 800. Like you go, it's fluctuates, not consistent, but just picking up the little nuggets as you go and having that compound is so much more valuable than thinking a one-time aha moment's going to get you there,
That totally makes sense. And the whole time you've been profitable, it's been mostly in the OTC market, right?
Yeah. So when I first started, I thought I was going to be a long trader. So I tried going long, lost a lot of money. So I tried going short, kept getting squeezed. So I kind of was pretty confused as to where I wanted to do. And I had an E-Trade account, so I couldn't short OTCs at all. So I rarely took them long. And then when I turned 21, which is around that 10-month period into the journey, I learned I could short OTCs at Interactive Brokers. So I opened an Interactive Brokers account, and I immediately realized this is where I could see myself being more profitable. Besides like the OTC dip buys, I could short OTCs and actually I might have a much better edge in the market. So that was huge for me, having the right broker at Interactive Brokers. And then that gradually led me to almost probably since I was profitable in month 12 to probably around, I would almost say like month 18 or 19, I completely forgot about NASDAQs. I mean, I didn't even, when I had a scanner at night, I wouldn't even look at NASDAQs. It was only OTCs because that's where I was finding most consistency, where if I knew I went back to NASDAQs, I might still have an edge, but I would, when I was tracking my stats, I would just see my edge was clearly in OTCs. So I had to just completely cut out NASDAQs for the time being until my account got bigger.
I mean, OTCs, from what I've seen, it's kind of seasonal. It's up and down. Some months are super hot in the OTC market, and then others, there's just not that many plays. So how do you deal with that?
Yeah. So actually, there's someone asked me this question on Twitter, and I think Jackaroo or Jack on your podcast, he shed some light to it. You have to really, like, this month's actually a perfect example because it's been way slower than it has been in the first 3 months of the year. And you kind of, with experience, you recognize that very quickly. And you're able to really take a step back almost mentally. Like once April started, I immediately had seen this before from trading OTCs. So you really take a step back. You almost, like the analogy, everyone else says the analogy, you really feel like a retired trader. I really took a step back and just took way less trades. And once my account got big enough, I then started branching back into NASDAQs. So now probably 20% of my trades are from listed stocks. But handling when it's slow times, you just have to be patient. Working on your patience and having that experience to just sit and wait and not take a trade and being okay with not taking a trade. that comes with time, and it's super valuable when the OTC market gets slow.
How's that mindset shift kind of work for you? Because for news traders, it's kind of tough because you want to be making money every day, and you kind of need it for your confidence. So how's that mindset shift work for you?
It's the mindset is huge, because I've been there. When you're a new trader, you want to overtrade. You want to feel like if you're not making money, then you're losing money, even when you're break even. And I think the mindset shift for me was realizing that almost in a humbling way, realizing I was such a new trader at the time that just surviving is enough. Like 90% will lose money or quit. So just breaking even, if that means even not taking any trades, and that keeps you in the game to let you keep on trading when there is plays, is just that was a huge shift for me, realizing that I prefer staying in the game than trying to push something that's not there and lose money in the long run. Because you think, taking a trade will eventually lead you to make money, but if you're new, you have to be honest with yourself and know whether you have an edge or not. And from tracking your stats, you should be able to see that for yourself. So I knew at that point, forcing trades that weren't there wasn't going to help me. It was only going to hurt me. So that was enough for me to kind of take my foot off the gas when it was slow.
I think that's something a lot of people, more successful traders say is, when you're not taking trades, it's better than being in a losing trade, But I think, like you said, it's really hard for a new trader to feel that way. But I think it's a good analogy that you made, or a good connection that you made. If you're not losing, you're doing better than the 90% that are. I think that's important for new traders to hear.
Yeah, because I'm trying to figure out the best way to say it. It's right. You feel like not making any money. Well, because trading itself is inconsistent. When you're not making money, you feel like you're not getting ahead in time, or you feel like everyone's making money, you're not. But the reality is, 90% aren't making any money. They're losing it. So if you can just maintain your account where it's at, or even lose a little bit, even the less you lose, the better. You're much further ahead than you really think.
And so out of curiosity, you mainly trade OTC stocks. Are you day trading these? Are you swing trading them? Scalping?
Yeah, so I definitely have never been into scalping. It's almost like a reaction where I'll see like someone on Twitter post like trades that are all scalp trades, and I just cringe. Not that it's a bad strategy, but it's not in my personality whatsoever. Majority of my trades are day trades, probably 30 minutes to an hour, maybe 3 or 4 hours at the longest. And then I would say maybe 10% of my trades are swing trades, where more than a day. So I'll take a few overnights, but I don't really, technically they're swing trades, but when I think of a swing trade, I'm thinking of holding 3-4 days, maybe a week or so. And I would say maybe 5 to 10% of those are legit swing trades, but they're only short. They're shorting. When I do swing trade, it's shorting like pump and dumps. They're much rarer than they were, say like 2011, 12, but there's always a few throughout the year. And so when I find one of them, I'll let myself swing short them for like waiting for the actual dump after they pump it.
Definitely. And is that the main strategy that kind of brought you to consistent profitability?
That was one. So when I first got profitable, I was mainly shorting OTC like supernovas, just big overextended runners. And then I was dip buying them when they panicked. So those are the two main setups. After about 6 or 7 months of profitability, I was watching two traders in the chat room, Tim Lento and Michael Good, on how they were treating some of these pump and dumps. And I kind of just picked up a few nuggets that they had. And I quickly learned that was my next strategy that I wanted to add on to my system, which was finding these not just manipulated runners, but these OTC pump and dumps. Like this, you see like the email spams. You see like ads on social media, and then you look down at the articles, and then like there's a disclaimer saying we've been paid, this many shares at this price, or we've been paid $100,000 to promote this stock for the next month. And so that pretty much confirms it's being manipulated, not just because it's running, but because they need to sell something at the end of it. At that point, I would then know they're going to dump this eventually. So I would learn to short not a lot of size to get squeezed, but enough to where I would hold it for a week or two. And by that time, it would have already dumped, and I'd make my, 50 to 60, 70% gains on the way down.
Which is pretty wild. The dumps on the pump and dumps are, as you were saying, extremely profitable.
Yeah, it's a trip watching it dump and having your profits just like it takes some discipline to do, because some of these shares are short on these pump and dumps are very rare to find. So I take a small enough position where it might go against me for a couple days, but because I don't want to get rid of the shares, but also because my position size is so small, I'm willing to ride it out a couple days. And then once it dumps, it's like riding a roller coaster. You just see it all come to fruition, and you see the promoters dumping their shares, and then you just bank on the way down. So it's a pretty sweet feeling.
Gotcha. Is that normally how you trade them? You kind of short on the way up, or do you also, try to short when the dump begins?
So if shares were incredibly available, if we had millions of shares of pump and dumps, then I would only want to short on the way down for a safety issue, But because the shares are so rare, lately I have found that trying to wait to short the backside when the dump comes, shares are already gone. So what I'll do is I'll short on the front side, but late front side. I've had a mistake before. I'll actually talk about this. My biggest loss was on the pump FPTA, and I made the mistake is I shorted way too early. I had a feeling that it was going to go higher than I expected, but I kind of ignored that. And I got short around, I think, if you look at the chart, I think it went high as like 8 or 9. I got short around like 4. And so getting squeezed 100% is not what you want to do when you play those. So that was a loss of about $3,000, which is pretty rough. But and the reason why was because I shorted too early, but then I also took too much size. If you're going to short early, you have to be okay with shorting such a small amount of size that it's not going to mentally affect you, because the mental game of playing pump dumps like that is just so vital. Just having a small size is crucial until you can either find shares for the backside or be willing to hold those shares throughout the whole pump until they dump.
Kind of talking about you're using small size shorting these pump and dumps. During the course of your consistency in the past few months, have you started increasing size at all, or do you just kind of stay relatively the same size and just you're happy with what you're seeing right now?
Yeah, so that's probably my biggest not obstacle, but my ongoing challenge as I grow my account size. The podcast you had with Brian Lee, where he talked about using 1 or 2R or 1 or 2% of your account, is definitely how I like to do it. So if I have a $50,000 account, I would like to risk 1% of that and be happy to be 500. The problem is, and this is where my challenge comes, is the faster my account grows, then the faster the 1% is, or the bigger the 1% is that I risk on each trade. And so psychologically for me, I'm much more slower to adapt to a much bigger loss, taking a much bigger loss of that's still 1% as my account grows. For example, my account now is around, I think, 70,000, but I would be very uncomfortable risking $700 on one single trade. So now I'll pick just a certain amount that I'm comfortable with. So right now, this month, it's 600. So if I take any loss bigger than 600, I'll kind of make a note of this and say why did I lose this much, or why did I lose, what was wrong? Did I risk too much? Did I take a too big a position size? But anything lower than that, I'm comfortable with, and knowing that that's just an average loss. That's part of the game. That's just part of the business, and I can keep moving forward. But until I'm accepting that taking a loss of 600 is still fine, then that's when I feel comfortable. Okay, I'll push it and go to 700, or then I'll push it and go to 800. So over time, I do want to up my size as I go, but I don't use the 1% rule anymore. I just kind of play it by how psychologically comfortable I am in the trade.
Now, for your trading style, how do you know when the backside is occurring on these OTC either pumps or the just shorting when they get really overextended? Because obviously you had your one big loss that you mentioned that you got squeezed on. So what's kind of the signal now for you to hop in short on one of these stocks?
So this is something the big loss in FPT actually taught me a lot about this. So we'll talk about pump and dumps and then just regular overextended runners. On pump and dumps, the float is massively important. So the thing I didn't look into with FPTA was that the float was about 4 or 5 million shares. So that's considered a low float. That's why it ran to 8 or 9, no problem. And I completely ignored that, thinking shorting at 4 was a smart idea. On the other hand, if you look at a pump anyone's listening got their charts up, you can look up a pump like NHEL. That one I think had a float of about 60 million. So it's a big difference there. That thing only went up to I think 140, 150. So the float alone right there can tell you about a pump how high generally it could go. So that's an indication if, shares are not available as much as you'd like them to be. You can kind of gauge, okay, a lower float one is going to maybe hit $6, $7, $8 if it goes continue. If the promoters are able to promote the stock successfully without like the SEC getting involved or someone, dumping it before they want to dump it kind of thing, it'll go to maybe 6, 7, or 8, or even $12. KLMN went to 12, which is pretty nuts. I've never seen that before. But if it's a higher float one like NHEL, that one might only go to $1, $2, $3 at most. So that's kind of a way you can gauge where you'd want to try to get short if there are shares. But more importantly, the price is more important than having shares. There's been times where there are shares available, but I know that the pump might be too early. So I'll willingly hold off on getting short. The whole idea is you want to stay comfortable the best you possibly can. So you do that with small size and trying to gauge by how big the float is where you'd want to enter short at what price. So if, FBTA is pumping up again and it's at $1 or $2, I'm not going to feel comfortable getting short there. Like I'd want to wait to get short at 5, 6, 7, or 8 kind of thing, because that's where I went to last time. So that's for pump and dumps. For regular OTC runners, it depends, right? It's kind of similar in NASDAQs in the way that each one is different. Each stock has its own personality that you have to read, and how is it different from the past runner that you played. Some on OTCs are incredibly easy, where they'll have 3 or 4 up days, and on each day they've never gone red. I think Tim Grattani talks about this in Trading Tickers with OTC shorts, where some have never it's as simple as looking at the daily chart and seeing that in the past 3 days it's never gone red on the day. Like every tick has always been above red green from the previous close. So sometimes there is easy, and this is not all the case, but the first tick it goes red, you short. You just enter right there, you risk high a day, and generally they'll pull back 10 to 20%. So that's one case. Another case is if, red green isn't meaningful, you have to look at the personality. Like I said before, you have to look at, does this thing usually spike and maybe have like a blow off top? Does it go red and then immediately come back green? You have to look at these things or maybe it never goes red, or it goes red, but it won't actually have its backside until the first red day. So sometimes it'll go red. I won't even short. I'll officially wait for the first red day, and then I'll short into the close, confirming that the backside might be in better than it was prior. So I know it's a lot to take in, but I think the best case is just from experience, you'll be able to read a stock by its personality and by its trends in the chart. And you'll be able to dictate, okay, this is the backside for this one. This isn't done yet. This can go higher. And you'll get better as you go.
Now, correct me if I'm wrong, just for the listener's sake. I mean, EDXC, isn't that a pretty good example of what you're looking for?
Yeah. So that one, unfortunately, I couldn't get any shares short at my brokers, which sucked. But that's a perfect example, because that one is, if you look at anyone listening, look in the daily chart, it's so not choppy because it's going straight up every day. But it's so it goes red a little bit, it comes back, it has a small green day, it has a big green day, it has a small red day. So that was very hard to read. In that particular instance, which is a great example, is right, you want to wait for what happened yesterday, which was the massive, massive dump. So any little red day didn't matter on that run up, but when it had a massive crack and then another massive crack into the close, that was pretty much confirming, okay, this thing isn't just having a red day, like the backside is in. Right, and I think anyone who follows Stephen Ducks, he says all the time, you're waiting for a massive momentum shift, right? You're looking for a huge crack in the run up. That's probably the biggest crack that's happened since. So, I'm sure if you pull up I don't have my charts in front of me, but if you pull up like a 5-minute, maybe 15-day chart on EDXC, you could probably see how all these little red days or pullbacks aren't that meaningful. But then yesterday, when it pulled back once and then pulled back hard again into the close, those were probably the 2 biggest pullbacks you've seen in the run-up. So that would pretty much confirm the backside is in. Do you have any, any advice to people who might have trouble being staying patient for these big changes to actually get into the trade? Mm-hmm. Yeah. There's a saying, I don't know where I heard it from, maybe like one of the trading books I've read, but it's, I'd rather be late and right than early and wrong, right? The whole point, I think some people, it's easy for traders to get caught up in wanting to be right in the stock rather than making money, or rather think they want to make money and be wrong kind of thing. So I'd rather have a solid trade thesis and trade well that leads to making money than trying to time the top or, be dead on from the beginning. I'd rather almost wait so late that I know 100%, because the whole idea is here, we want to make money, and you want to make money in the highest odds situations. So being able to like take a step back from the emotion of the stock going up or down and seeing it, maybe you feel like, oh my gosh, that was the top, and then it's not the top. Oh, could I short here? And it's not the top, and you keep getting squeezed and squeezed and squeezed. Instead, waiting for the top to confirm to be in, like on EDXC, wait for that massive crack, and then short a little bit, maybe put on a starter if you're above the PDT, or even below the PDT. Just trade small size and get used to shorting later, rather than feeling like you're in a rush to get to the top. And I guess I could say, you don't have to time the top, right? When you're shorting, it's not necessarily important to get the top price. It's important to make sure you're not holding it short when the bottom comes in, right? You just have to take the meat of the move. You don't have to catch the top and the bottom. So I think just having patience and understanding that you'd rather be right and trade well than trying to be early and have an awful trade plan and end up losing money in the process. I know it's kind of a odd way of me explaining it, but I think I'd just rather be trading well and being right than trying to time a top and just getting squeezed.
Yeah, that makes complete sense to me. Why would you, and it's a common like fallacy for a lot of new traders, but why would you want to be in a trade if you weren't confident, or you thought you were too early? You might as well just wait for the moment where you're right.
Right. And that's where it can get conflicting between if you're shorting a pump and dump or you're shorting an OTC runner, right? Because kind of the way I'm explaining, they both kind of contradict themselves. Pump and dumps, I want to get short early because I know that's when I can get shares to short, but not too early enough to where I think I've timed it wrong, kind of thing. Whereas with OTC runners, where there might be more shares to short, I much rather just be late and wait for because I guess the best way to explain it is OTC runners have there's 90% of these are going to fail. Like most of them fail, most of them pull back, but the path that they can take to eventually get a pullback, like EDXC is a perfect example again, where it might take so much longer than you expect and be so much more choppier on the way up than you expect. Whereas pump and dumps, they're like it's not even 90% chance they fail. It's like a 99.9% chance they fail for pump and dumps kind of thing. Like, someone has to dump shares on the other end for pump and dumps, whereas you can't really confirm anyone is going to dump shares on a OTC runner, right? The backside's coming, but with pump and dumps, someone's going to dump, versus OTC runners, you don't. So that's how you want to trade them differently, kind of thing.
Yeah, that's definitely an important distinction. So you mentioned the PDT. You started below the PDT, right? Or were you always above it?
No, yeah. So I started with $6,000 at an E-Trade account.
Gotcha. So has your trading kind of evolved once you got above the PDT versus when you were below it?
Definitely, yeah. So I would advise anyone who's under the PDT to do what Kurtani did. Open up 2-3 accounts, split your money if you have to. I did that with E-Trade and Interactive Brokers, so I had 3 in each, so 6 per week. And so it's rough because it all depends on what broker you have. Because under the PDT at E-Trade, I knew I couldn't add, right? I had to be 1 in, 1 out. That was a day trade. Whereas at Interactive Brokers, I could buy, and then sell, and have it still be a 1-day trade. So as long as you're at IB, as long as you're just buying, entering, and then selling, and you're not buying and selling, it's only going to be 1-day trade. Whereas E-Trade, you can only enter once, you can only exit once. So that definitely affects how you trade. Yeah, that's why we're all hate or love the PDT on your opinion on it. But once I passed the PDT, I then started becoming much more flexible in how I entered positions. So if there was a trade where I didn't feel entirely comfortable taking, but I thought I had a high chance of profiting, I would just put a starter on, right? Beforehand, if I had an E-Trade account, I would have to either go full size in or just be willing to take small size and only enter once. Whereas now I'm much more willing to put on, 1/5 of the size I want and just letting it sit for 30 minutes to an hour, like seeing how it trades, getting a feel for the price action. And as the trade would keep working for me, then I would add on and keep adding until maybe the final confirmation comes for the hard crack of a backside. Because there's nothing wrong with, I go back to the whole timing it on the upside, waiting for the backside of a move. There's nothing wrong with taking a starter thinking that this might be the top, right? Because with a starter, by the time you're proven wrong or it keeps squeezing higher, you'll take a very small paper cut loss. That's not a big deal. Because once the backside is in and you do size in, that gain is going to be massive than any little paper cut loss you took on the way up. The problem is when you're under the PDT and you're trying to time the top, that's like two things going against you, because you don't have the ability to size in small and just take a small loss when you're proven wrong. So that's probably the biggest change that's happened to me being over the PDT.
And so, at what point did you make it over the PDT? Was that in like the past year or so, or was that?
It was August, or no, I think it was September. No, yeah, August 2018. Yeah. Oh, wow. So I guess, yeah. So since I was, I guess, how many months was that then? It was probably, yeah. Since I was, when I the first month being profitable to the crossing PDT, it was probably 14 or 15 months. So I was just grinding it out the whole time through there.
Yeah. Damn, that's impressive.
Did you learn any lessons like early on that have like really kind of helped you, like once you got over, because it looks like once you got over the PDT, that's kind of when you really just kind of got exponential. Other than that, it was kind of, there was that slow grind down, that slow grind back up. Did you learn any like valuable lessons being under the PDT that kind of made you explode after you got out of the got over the PDT?
Oh yeah, definitely. I got a perfect example. So I see plenty of traders who start over the PDT. I mean, there's nothing wrong with starting above or over it. It's just understanding what kind of position that puts you in. So I've seen plenty of traders who have started over the PDT, but they have an overtrading problem, right? I wouldn't say they're spoiled in a way. They just don't know what they have, right? They don't know the privilege they have of taking as many trades as they want, kind of thing. So there's a lot of people who are over the PDT who are just starting out who kind of overtrade. And it's understandable. Like when you first start, you want to trade a lot because you need to figure out what works for you. What setups are you profitable with, and kind of thing. But there comes to a point where being over the PDT can actually hurt you more than help you. So I think for me, it's funny. When I was under the PDT, I hated it because I couldn't trade as much as I wanted. But being over it now, I'm grateful for starting under, because I was able to really learn how to be patient. Like we'd mentioned before, really learning how to just be okay with not trading and being okay with just being break even for the day and not taking a trade. Because once I did get over the PDT, I was still kind of in like the under the PDT mindset, right? I was still taking trades that were my setups, but I wasn't just, gunslinging and taking any trade I saw because I had a trade. I kind of had, being under the PDT molded me into being very selective and only trading my setup, not just trading something because I thought it was going to go up or down.
It sounds like, that was a big part of what has helped you get this far. Have you had any other philosophies in your trading, or just any thought processes in your trading that have helped you get to where you are that we might not have mentioned yet?
Yeah, I got two that immediately came to mind. The first one is trading well over trading your PnL, right? If you trade well, right, if you want to make, it's almost like, and this is why trading small size can be seen as beneficial if you have this mindset versus, perfect example is when I first started getting profitable. I mean, I think my average win was like $40. Seeing that now, I would, most traders want to laugh at that, but the reality was the $40 didn't matter. It was that I was making solid and sound trade plans. So then now a year later, I can make $400, not $40, right? And then maybe next year from now, I'll be making $4,000, not 400. You know what I mean? So the size and the PnL don't matter in the beginning. They really almost don't matter the more experience you get. The reality is, if you trade well and make solid trade plans that fit the market's reality, not your reality, the money will eventually come. It's all about trading well over trading your PnL. And then the second one is learning how to take losses. I remember when I first started out, I would terrifyingly avoid taking a loss, right? Not to the point of where I was so stubborn I'd bag hold. I never had that problem, thankfully. But just even the idea of entering a trade and the idea of taking a loss was so terrifying that, I mean, I would my hands would be shaking just trying to enter the order if I even wanted to enter. And there's a podcast, right? You guys know, have you guys heard about Chat with Traders podcast?
Yeah. Oh yeah, of course. Yeah.
Yeah. I'm pretty sure most people have. But the one podcast they had on Rambo, I think it was his nickname. I don't remember his full name. But on that episode, he had a great saying. He said, our society and how we grow up in America or even in Europe or whatever country in, most of us are taught to learn how to win, right? Everyone knows how to get a trophy when they win a game. Everyone knows how to brag when they win. But no one is rarely ever taught how to lose and being okay with losing. So I think learning that you're going to take a loss at any point in your trading career, no matter where you think you are or where you are, is massive, right? You have to see it as almost a business expense and that it's just going to happen, right? You can't have a win rate of 100%. It's just not going to happen. You have to be willing to accept taking a loss at least once every 4 times, or half the time. Maybe if you're like a trend trader, you're taking the losses like 1 every or 2 every 3 times. So it's just something you have to accept, and that's why risk management can be so important.
Absolutely, and it sounds like, correct me if I'm wrong here, a lot of those 3 trading philosophies, or the ones that we've talked about, have all been about patience and just staying patient with your trading. So obviously that's worked really well for you.
Yeah, and I can definitely say I've got the patience from my mother's side. Just as a basic characteristic of mine, I've always been more a patient person. But I don't think it's something that can limit somebody. If you're naturally an impatient person, I definitely think you can not fix in a way, but you can absolutely become more of a patience person. It's just what kind of mind frame or what kind of thought process you need to develop for yourself that will allow you to understand how to be patient, kind of thing.
Yeah, I think it's really important to emphasize your last philosophy too about taking the losses quickly and having smaller losses, because for a lot of people, they can put a series of good trades together and then they have that one big loss that'll set them back like a week or 2, and I mean that's pretty discouraging for a lot of new people.
Yeah, and that's why I think starting out with the 1 or 2% rule is so important, because it's kind of like the known saying that everyone will blow up their account at one point. And it's up to you to define whether you want what a blow up account is. Like most people will literally blow up give up their entire account. But I'm pretty thankful that I learned that 1% rule pretty quickly, because even though I started with my $6,000 account in E-Trade, I think the lowest it ever gotten was $1,700, simply because when it got about halfway down, when I lost about $3,000 of it, I pretty much realized I don't have endless amount of money to keep refunding an account that I blow up, right? I have to really narrow it down and really tighten my risk to be able to almost ensure that I can't blow this up. And the best way to do that would be extremely disciplined with the 1% rule. If you're only losing 1% of your account on any trade, you'd have to lose at least 100 times, to officially blow up your account. So that's just much harder to do than versus taking 2 or 3 massive losses and immediately your account's gone, just like that.
Yeah, definitely. And again, that's going back to what you were saying. Trade well, not your PnL. Just keep, even if the wins are small, just keep it going that way. So besides that, would you have any other tips for new traders in terms of, someone starting off with a small account? What do you tell them to do? Would you wait for more experience or just get right into it?
So I think getting right in, I mean, you don't want to do what I did and just immediately start trading without any education or any at least some form of background. I remember I would look at a daily chart and think that was the intraday. And so then when I first started trading, I would look at the intraday chart and this looks nothing like what I saw, So don't do what I did. But I definitely agree. I definitely think at some point you just need to start, right? You can only study a chart for so long until being in the trade will give you much more experience than just watching it. That's why I think I'd rather you take 100 shares of any stock and just trade it and maybe lose commissions or lose $20-$50 at the end of it than paper trading. I think the mindset and dealing with the emotion of trading is so much more valuable and is going to bring a lot of experience in the long run. And I think looking for ways. So I mean, trading is competitive, but it's kind of competitive with yourself, not with others. But at the same time, the experience you have and the edges you find in the market are going to allow you to profit over people who don't have that edge. So the best thing I could think of is just studying almost not everything, but as much as you possibly can. I'm looking at my bookshelf right now, and I mean, most people don't want to read, and I actually personally hated reading before I found trading. But once I found trading and once I realized the amount of information you can get from reading trading books like Brett Steenbarger and the Market Wizards and Reminiscence of a Stock Operator, all those books just have such valuable information. And so for people who didn't get to read that book or at least listen to it on audiobook, that's an edge an experience that now I have over others who didn't. So for anyone who's starting out, just really almost really the silly analogy, just being like a sponge, just absorb everything and experience everything and just take in as much as you possibly can.
That's great advice. I mean, you're more disciplined than most people, which I'm sure has contributed a lot to your success. But what is just the one thing that you wish you knew before you started, or maybe what is your biggest regret so far in your trading career?
Oh man, I've had 2 thoughts about this. One, I want to say I don't regret anything. I'm really glad the way it turned out, kind of thing. But then, like I said before, I really wish though I did start studying a little bit more than I first started trading. I mean, I didn't want, I mean, I watched like an hour of a DVD, and then the next thing you know, I'm in a trade blind, you know. If I could just have removed the first probably 2 or 3 months where I was so incredibly lazy, like I'm disciplined now because I know how to treat it, and I treat it like a business, and I treat it like my career. But the first 3 months, I mean, if I didn't have a day trade, I wouldn't even wake up. I wouldn't even make a watch list. I mean, I was just incredibly lazy. So if there's something I could tell my former self, was to just take it serious from the beginning. You know, I'm sure everyone gets has a friend who wants to get into day trading but isn't really serious, or kind of dabbles with it and isn't into it. You know, if you love it, you'll know. And if you do, take it seriously from the beginning, you know, like treat it as a business. Like this is your job. This isn't, you know, some hobby you play on the weekends kind of thing.
Awesome. Yeah, this has been a great conversation, but we're going to work towards wrapping it up a little bit just so it's not, you know, too long for some people. But what's next for you? You know, are you working on any new strategies? Do you have any big plans going forward? Or like, do you have some set plans for what you're going to do after college is done?
Yeah, so for as trading wise, I'm definitely been working on shorting NASDAQ stocks. I've definitely been working on like trading overextended gap downs and trying to find the backside of those kind of runners. That's where my next one I want to trading again. I want to, you know, increase my size and just be a better all-around trader on both listed. And then as for outside of the market, like I said, if I wasn't, you know, planning on being as profitable as I was, then I would definitely be looking to get a job. But right now, you know, I love trading, and I plan on, you know, trading as long as I possibly can. So when I graduate, you know, it's going to be full time. I do think if anyone's listening knows a good like screen record or a good video recording software, just let me know. I'm thinking about maybe making some videos, helping out the community a little bit, and you know, just taking it forward from there.
That'd be awesome. I think that'd be really great to see. We'd be watching it, that's for sure.
Yep, definitely.
So do you have anything else that maybe you wanted to cover before coming in here that you didn't get to share?
Thinking, yeah, I got one more. This is probably like the underlying thing that really helped me compound my lessons and my losses, which is tracking your stats. I can't express how important it is to whether it's an Excel sheet or it's by hand. You know, if you're on Profitability, you can track your stats there. But even then, I think tracking it on an Excel sheet and learning where you're good and bad is so important. I mean, I remember one of the first setups I wanted to learn was technical breakouts. And I remember trading them a lot, and I thought, oh, I'm doing really well. And then I actually took I think I had like 15 trades on breakouts for like the last like month or two when I was trading, first starting out. And I was unprofitable, right? Like I wanted to trade breakout so badly, but when I gathered the stats and I looked at the numbers, that wasn't my edge, you know? So I think being able to see the numbers rationally rather than thinking what you want to be good at or what you want to, what type of trader you want to be on an emotional side is really important. You know, knowing where your edge actually lies by tracking your stats is going to be so much more valuable to you in the long run.
For sure. That's some great advice. And I think for anyone who's just starting or is trying to find success, I think that's one of the more frequent pieces of advice that we've heard in the past few episodes especially, is just keep tracking that stuff, and that, again, helps you to find your edge.
Right. Yep.
All right. We had a great time talking with you. Can't wait to put this episode out there. And best of luck to you in your trading career in your future, and hopefully we can talk to you again in the future and see how you've done, or see like how far you've come.
Yeah, absolutely. Thank you so much, guys. I appreciate it.
What is going on, guys? This is Bryce Tuohey, one of your hosts at Beyond the PDT. We had a great time interviewing Kyle at this week's episode, and we really hope that you guys had a good time listening and got to learn a lot. But again, as always, if you have any questions, comments, concerns, or want to check out the blog article, make sure to check out our website, www.beyondthepdt.com, where you can find all that information and more. We can't wait to see you for next week's episode, as this will be a fun, special episode number 10, and we're very excited to get that out there. So we'll see you then, and make sure to have a good week, guys.